Good evening, everyone. Thank you all for joining the third quarter results conference call. With us, along the name named by the operator, with us also is Mr. Jeshwar Sir, our Head of Strategy. I'll start my presentation. So most of you would have received our results by now. However, let me briefly take you through the broad numbers for quarter ended 31st of December 2017. During the quarter, our revenues grew by 8% to 840 crores. EBITDA at 180 crores is 22% of sales. The net profit after tax went up by 52% to 131 crores. Aggregating for 9 months up to December 17, our total revenue degrew by 5% to 2277 crores, 2277 crores. EBITDA was at 468 crores, which is 21% of sales. For the same period, pre-R&D EBITDA, that's EBITDA before R&D expense, is about 33% of sales. The net profit after tax went up by 3% to 317 crores. EPS for the quarter, not annualized, EPS for the quarter is 6.93 per share versus 4.59 in the previous year. Capex for 9 months, including the capital advances for the new projects we are building, are rupees 458 crores, and the net borrowings as on 31st of December 2017 is 472 crores. Debt equity still healthy at 0.22. I will now hand over the discussion to Pranav for his insights on business.
Thank you, Mr. Baheti. As regards to R&D, we have spent about 98 crores in the quarter, which is 12% of sales. We filed 4 ANDAs and 2 DMFs during the quarter. Additionally, Alior, our JV, I'm very happy to note, our Derm JV has filed its first ANDA during the quarter. This was from a CMO, not our own facility, which is also recently ready. The projects are progressing well. The Onco and General Injectable facility will be ready in first half of FY19, and the new oral solid dosage facility should be near completion by the end of the year, by H2 FY19. As I mentioned, the Alior facility is already ready. Plants continue to remain in compliance. We received 1 approval during the quarter. With this, we cumulatively have 63 ANDA approvals, including 9 tentative approvals. If we include our recent acquisition Aurit, our cumulative ANDA approvals are 70 and pending approvals are 49. We launched 2 new products in the quarter, which led to a total of 8 new launches in the first 9 months of this financial year. The international generics business grew by 3% to 311 crores for the quarter, compared to 303 crores last year. US had sales of 237 crores for the quarter, which is roughly about 76% of the international formulation sales. The API business grew by 8% to 180 crores for the quarter, compared to 167 crores last year. Coming to the India formulations business, the revenue grew by 14% to 349 crores as compared to 307 crores last year. Post the GST transition, the revenues reported are lower to the extent of the ED component, though it's a profit neutral adjustment. Normalizing for this and some other transition related adjustments, the comparable year-on-year growth would have been much higher, almost close to 20%. I now open the floor for any questions that you may have.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We will take the first question from the line of Shivkant Sharam from Research Delta Advisors. Please go ahead.
Just wanted to know how much was the contribution from Prestige this quarter?
We don't give product-wise contribution from any of our products. As regards market share, our partner has picked up a decent market share and it's available in the public domain, but we don't give product-wise contribution.
Okay, so how much the contribution from Orit acquisition?
Orit is a very small acquisition and the contribution is very marginal in this.
No, as of now, there is no contribution. In fact,
Okay, so basically your US growth has been by 24% quarter-on-quarter basis. So just wanted to understand where this growth has come from.
no, I didn't get your question.
Yeah, your US growth has been 24% sequentially, right? So, yeah, US growth, US revenue growth. Yeah, so just wanted to understand, I mean, how much, the growth has come from, which factors?
So, the thing is, as I said, Orit is a small acquisition. So, in this quarter, Orit will be about $1 million or less than that, probably less than $1 million contribution. Product-wise, we don't give a breakup of what we do. Where the growth has come from is we've had a volume growth on a lot of products. We've been picking up market share. As I said, we've launched 8 products this year and we've picked up market share in some of those, as well as some older products as well.
Okay, thank you, sir.
Thank you. We will take the next question from the line of Nimesh Mehta from Research Delta Advisors. Please go ahead. Okay, as there's no response, the next question is from Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Just trying to understand this India business. We have seen a very good growth, especially on the acute side. Any particular thing? I mean, is it good season or, I mean, is it a function of inventory levels going up? Could you elaborate there, please?
So, yeah, I think both. I think, and one more factor. But yes, there has been, the season has been good. So, acute has generally done well for the sector. There is some level of restocking again, which had gone down to very low levels post GST. And the third is, I think our team seems to have done well in the rejigged promo strategy, where we have rejigged our promo strategy to more science-driven, more doctors in clinic driven, rather than those the earlier or the industry followed practice of freebies.
Understood. And when you talk about grid, this is for US, so when you talk about grid being 5-fold, what is the number of products we are working on today versus, say, maybe 3-4 years back? So is it like 50 to 250?
3-4 years back, and I've said it in the past, our product grade was about 40 odd products, which is over 200 now, closer to about between 200 and 250.
This is across forms, dosages.
Exactly.
Okay, and the kind of R&D, I mean, this year you mentioned about 400 to 450, but do you think that kind of run rate could sustain going forward, or you see some spike given the fact you come nearer to, filing and all?
Yeah, so what I said in the past, and with this big jump that we had, when we moved from the 200 levels to 400 plus, I said 2-3 years we'll be between the 400 to 500 crore level. Next year expected to inch up to about 500 or so. They will follow gradual growth until we see some big opportunities that we really want to get into.
Understood. And secondly, on the EBITDA margin, if you look at, I mean, we highlighted in the last call that, margins could kind of taper a bit given the fact that, there's pricing pressure, everything put together and R&D going on stream. So what has played out well versus what was anticipated?
So a few things. One is that you see, we compared to last year, the quarter last year, we have a lower R&D spend. That's one aspect. India business has done well sequentially compared to the last year, so it's recovered quite well. Sorry, compared to the sequential quarter, it's recovered quite well. We've picked up market share on some products as well, and few of these things together have led to a higher EBITDA for this particular quarter.
Understood. And last question on the US. So now, what proportion of your products which are in the market today, you've been selling through your own front end? Is largely everything comes under your bucket now?
Not everything. There's still a handful of products which are not with us, which were tied up in the past, but that's, I think, about 5, 6 products, no more than that. The rest is all on our own front end, And I think we have about 30 odd products on our front end.
30 plus products on your own front end today?
Yeah.
And this includes the like of Ablify and others, the bigger ones?
Ablify was a partnered product, but it's come on our front end now.
Understood. Thanks. I'll join back the queue.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Anmol Kanju from JM Financial. Please go ahead.
Yeah, hi. Thanks and congratulations for...
Anmol, you're not audible.
Yeah, is it better?
Yes, thank you.
Yeah. Hi, congratulations for a good set of numbers. Second consecutive quarter of a margin surprise. So, Mr. Baheti, last time you said that, it's on the upward side, but should we start now getting used to a 20% plus consistent margin trajectory going forward?
So, okay, so I qualified my statement last time also, because if you look at in a quarter-on-quarter basis, the R&D spend can be slightly different in different quarters, and you are aware it can depend on multiple of factors. So, in a year, R&D can be 120 crore, in a quarter, in a quarter it can be 100 odd crore. So that can make some difference to the margin. Otherwise, if you look at my GC, if you look at my gross contribution at material level, it has remained almost very close to 27-28% for last many quarters. So I think that business is, that part, product mix, GC is more or less stable. Expenses are okay, well under control. There will be some seasonal expense in some quarters. Pharma people would be familiar with that. So other than R&D, there is not much of variable, I would say.
So
what I'm not factoring is today some of my price erosions in US had been better compensated by my higher volume pickup. I wish this trend continues. Or the price erosion gets a little less intense.
Yeah, and in terms of staff costs, we've seen a sequential drop. So any particular drivers for this, or how should?
In the month of September, probably there will be some those bonus payouts, etc., particularly for workers, etc. It's not significant.
Okay, thanks. And my second question is in terms of thinking about the US run rate. So 270 crores is what we did for the quarter. Pranav, on an annualized basis, how is it that we should be looking at our base? Is it fair to assume that 100?
Anmol, US is 237.
Yeah.
237. So we should be looking at around $150-160 million base business run rate on an annualized basis. Is that a number you're comfortable with?
Yeah, I think, if all goes well, I think that should be, on a base business, we should look at that. See, what will happen is there will be erosion on some of the older products. And what we'll do is we will have some new launches coming up. I think last year or this year in the 9 months, we launched 8 products. Hopefully, we'll launch a lot more next year. So, yeah, I think that should be a fair base number to assume.
Probably, Pranav, 150 would be little stretched. 135-40 would be a more realistic number for the investors.
Thanks.
If you do better, they will be happier.
Thanks, that's helpful. And my last question is, around some of the programs of our associated companies.
Yeah.
So during the quarter, we saw some of the lead candidates of an associate company, Ryzen, reporting some favorable data in American Society of Hematology. If you could just share your thoughts around how are we looking at it and what the road to commercialization would be and how value gets created in Alembic as an entity, that would be helpful.
So I think Ryzen is a exciting story investment that we've made, Alembic has made. I think whatever's in the public domain is available. I think the first molecule is with TG Therapeutics. And let's see how they commercialize it. I think I'm not sure what the commercialization plans are, but they're progressing quite well as you see from the public releases. The rest of the products are with us, and I think it's still early days. Let's see if the development is going well, and we'll see how it goes.
Thanks, that's helpful, and I'll get back into the queue.
Yeah, thanks.
Thank you. We will take the next question from the line of Bharat Celly from Equirus Securities. Please go ahead.
Hi. Thanks for the opportunity. So congrats for the good set of numbers. Just wanted to understand, so what is driving the domestic growth? So we have seen almost 18% growth this quarter. So what was the main growth driver this time?
So the growth on a absolute number is about 14%. With the GST or a apple on apple basis, you are right, it would be about 18-20%. So as I responded to an earlier question, the growth is driven by all three my better efforts at field by my MR team, a good season at least for the acute, and thirdly I think there will be some restocking now happening at the trade channel where the stocks were at all-time low in sometime in August, September.
Understood. So what sort of growth we should factor going forward, considering that there has been a jump in restocking? So how should we look at domestic business going forward? Because earlier we used to be around 11-12% growth rate, despite GST impact not being there. So how we should look going forward?
So I think we don't give guidance, but I think our efforts would be to at least stay with industry growth rate or slightly better than industry growth rate. So assuming industry grows by 10-12% next year, we should be growing by 12-15% next year.
Understood. And so just one more question. Sequentially, we have seen a significant jump in other expenses. So what has led to that?
I have not done, but what would be the major component for increase in sequential number? So marketing and promotion expenses. Okay. So marketing and promotion expenses for Q3 for domestic business is typically high because a lot of these conferences happen during this period.
Okay, so we should factor in a similar sort of number going forward as well.
More on an annualized number. So if you look at a 9 months number versus the 9 months of last year, we are okay. We are slightly down, and I think that should be the number you should be taking.
Understood. And sir, if we have to put everything in a pecking order in the US market, so what has led to the growth? So what will be the first thing which will be coming up? Will it be new launches or is it increase in the volumes of existing products?
So I think two things. One is it comes down to first of all, it comes down to where we see opportunities. New launches would definitely play an important part, but that's where you keep growing. The older products, there is competition. So unless there is some unique positions that we can get into where we want to pick up market share, where there are supply constraints, that's what the older products. I think we do both. I think new products, hopefully in 2-3 years, we'll have the injectables and the other portfolio also coming up, so that should also help.
Okay. Actually, I was referring to the current quarter. So I was just trying to understand what was the main contributor, whether it was volume increase or the new product which helped you in the packing order.
It's both. I think it's both because new products, even if we did launch them, it doesn't happen in one quarter that we go right away. As you see what we've been doing, we gradually build up market share in what we're doing. So I think it's a combination of both.
Understood. Thanks. If there will be anything else, I will join back the queue. Thank you.
Thank you. We will take the next question from the line of Chirag Dagli from HDFC Mutual Fund. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, gross margins, or rather raw material cost as a percentage of sales, how different would these be across the three sub-segments, India, formulation exports and APIs?
So we don't provide
Just
that.
qualitatively, some color, sir, would be helpful.
I don't think any company provides that data.
But would this be dramatically different, sir? The reason I ask is that, we have about 45% of our sales coming from India, which intuitively would be the highest gross margin. But the other two pieces, I can't see, any company sort of doing this kind of large gross margin. So I just trying to understand this better of, while you've been doing this for the last couple of quarters, maybe even more, but, how sustainable is this margin and your thoughts around, what is it that is driving this kind of improvement?
I think these numbers are sustainable unless, and that unless is a big unless either there is a very significant price erosion from here, or unless there is a very significant product mix change there. I don't see that happening in next couple of quarters. I can't predict for next 3 years.
Sir, would US formulations for Alembic be as profitable at the gross level as India?
Again, we don't discuss this segment-wise profitability. It's difficult for me to say this.
Okay, sir. And if I can just squeeze one more question, sir. When you look at your US business on this base business, $140 million, how do you think about product concentration on this, both from a sales standpoint as well as from a profit standpoint?
So like Pranav has always been saying that in US, for that matter, the top 20% of your product number would give you about 80-85% of your profits, and then there'll be another 30-40% of the products which will give you about 10-15% profits, and the rest will be contributed by the bottom 50% of the products. So I think we are no different.
Okay, sir. Thank you so much.
Thank you. We will take the next question from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Thanks. Pranav, in terms of your filings, when do you see, how do you, the number of products that are under development have gone up materially, but in terms of the filing rate, when do you see that picking up? And that probably will, given the fact that you're filing under the new judicial regimes, presumably that should lead to a pickup of approval that's, linked to the pickup in the...
No, it's a good question. So what will happen is, one is, if you see over the last 2 years, filing rate has already picked up. Excuse me. We did 20 last year. We've done 14 already in the 9 months year to date. We'll end up with upwards of 25 filings this year. That's one. Number two, when the new facilities are ready, which the Allure facility just got ready, but even when the injectables and the onco facilities are ready, we'll see more filings happening from there as well. So yes, filings will pick up, and that's what our internal goal is.
So, what's your assessment typically with this new, since we're filing in the new judicial regime, a typical 12 to 18 month should be an average approval timeline for most of these products, or there is a fair number of products which are probably in the complex domain, which have got litigation or approval issues associated with them?
So I think amongst our recent filings and what we filed over the last 2 years, this is the kind of response rate or whatever the timeline that you're saying, 12 to 18 months. That's the indication that we have got. And yes, we've got some approvals in that time as well.
So, logically speaking, 17 is when you FY19, sometimes the second half of FY19 onwards, we should probably begin to see a pickup in the pace of approvals versus the pace of approval that we've had in the recent past.
Yeah, probably, yeah.
Okay. And secondly, in terms of the approval visibility that you have for this year, while not getting into details, qualitatively, how do you see the approval pipeline, potential approval pipeline versus the kind of approval that you've had over the last couple of years?
So this year, as I said, we've got about 8 approvals or so in the 9 months so far. Earlier, about 2 years back, I said we get 6 to 8 every year. I think moving forward next year will be higher, in my opinion, which will be anywhere between 10 to 12 or so at least, maybe even more depending on how the FDA goes. But yeah, it's been quite good, the FDA's response on the new filings.
And in terms of the quality of approval that you probably foresee coming versus what you've got over the last couple of years?
I think what we've got in this year is a fair indication of what kind of products we filed, and I think we'll continue with that. As I said, the injectables are not there as yet until the facilities are ready, so that'll be much later.
Okay. Thank you.
Thank you. We will take the next question from the line of Kunal Randeria from Antique Stock Broking. Please go ahead.
Hello. Thanks for taking my questions. The first one is you have guided to around 10 plus launches, right, for FY19. So how many of these will be day one launches?
We don't disclose that. I think all we can say is amongst 45 pending approvals without audit, we have roughly about 17 which are either a Para 4 or a FTF.
Right. Okay, fine. And on the domestic side, I just, from your presentation, I see that some of the specialty therapies like cardiology and diabetes are actually slowed down in the last couple of quarters. You used to grow at around 15 to 18%, and now it's in mid-single digits. So any particular reason for that?
So yes, we have taken a beating. I would say some of it consciously. When we couple of years back, we changed our promo strategy where we wanted to be absolutely compliant. Absolutely compliant, even the unnotified guidelines which were issued by the government. And while I understand competition is still flouting them pretty blatantly, but I'm not complaining. I'm just giving a small reason. So we have lost some customers in the process, but the positive part is that we are building a much larger prescriber base. So the idea is not to be dependent on few key customers, but get our business generated by a larger number of small prescribers maybe.
Right. So then would it be fair to assume that once these processes are in place, a few quarters down the line, we could expect it to beat the market growth?
I hope so. That's the statement I made a couple of minutes back. So we should get our traction back once the guidelines are clearly notified and once other companies are also fall in line.
All right. All right. Thanks for taking the question.
Thank you. We will take the next question from the line of Rahul Sharma from Kavi Stock Broking. Please go ahead.
So just would like to ask any interesting opportunities which have been launched in the current year and which probably would be launched in foreseeable future in next couple of quarters and FY19?
Rahul, we don't disclose our filings, what we have. I think what the approvals we've got in public domain, you can just take a look at them. That gives a fair indication of what kind of pipeline we have and what we're getting so far.
Okay, but would you, can I say that there'll be at least around couple of them out of 10 launches next year, we will be having around 4 to 5 would be less competitive?
Rahul, actually that is not in my hand because I don't know. I don't know myself because I don't know what the competition is doing. I don't know how the market is going to change. But as I said, if you see our last 8 approvals, last 10 approvals, you'll get a fair idea what kind of products that we have.
Okay. Thank you.
Thank you. We will take the next question from the line of Dhiresh Pathak from Goldman Sachs Asset Management. Please go ahead.
Hi, thank you. For as per the presentation, 9 months domestic growth has been flat. So is this as per our target market? Has the market also been flat, or we've grown slower than the market?
So 9 months, I think we have discussed enough. Q1 and Q2 were very badly affected by GST. Q1 was almost washed out. Q2 we did recover, but recovery was slower. And this is the first quarter post GST that we have done well. Market has also slowed down, and okay. So everyone is not affected the same way. Some may have done better than us, some worse than us. But industry as a whole has suffered this GST blunt in a way or in one or the other way.
So 9 months in our target market would have been flat. We would not have lost share for 9 months. Okay,
so the primary always doesn't give you that that indication because every company would have a different inventory in trade channel. I think for that, if you look at the ORG number, which also is part of our presentation, would be a fair indication.
Okay, understood. And what has been the capex year to date, and what is earlier we were 700 crore guidance, right, for FY18? How much have we?
Yeah, so I think we have already spent almost 450, 460 crore. We have already spent on projects, and I think it would not touch 700, but I think we will be completing bulk of the projects except the Jarod project which has recently been started. I think bulk of activities on other projects will get completed by end of this year.
And then FY19 would be a maintenance capex.
So FY19, the large capex will come for completing the Jarod project, which would be my second OSD unit, which will be a large capex, and the others, of course, will be the maintenance capex.
So how much are we spending on that, the OSD unit?
So I won't have the number on hand, but I think it would be about 200 crore plus project.
200 plus.
Some we would have spent by March 18, some would get spilled over the next year.
Okay, understood. And have we started, the onco injectable and oral blocks?
If you can be a little louder, please.
Yes. Is it
Yeah.
better?
Better.
The onco injectable and OSD blocks were commissioned earlier in the year, last year, in the middle of last year. So have you started filing from those facilities?
No. So there I think, I hope you are talking about our onco facility. So onco oral solid we had commissioned. Onco injectable is still under, under final phase of completion, would take some more time. And no, we have not started the filings.
Okay. And when is the derma and the general injectable will get commissioned?
The derm just got completed, so batches are on and in progress. And the general injectable should happen in the H1 of FY19.
Has this been delayed, general injectable facility?
No, I think by and large, we thought it'll be in that time frame, maybe between July and September or so. It's as per schedule.
And one last question on the US. If I heard correctly, earlier you said that 30 products in our own front end and 5 with partners. So we are marketing about 35 products currently.
Yeah, something like that, yeah.
Okay. So what percentage of our US sales, would we be vertically integrated with our own API?
I think by and large, what we started off with, and historically what we said is, our initial filings for the first few years in the US, they were all, we were pretty much vertically integrated on most of them. Even till date, from our portfolio, I'd say about more than 80% would be vertically integrated.
Okay. And have you shared the erosion in your base business in the quarter?
No, we haven't shared that.
Can you give it?
It's very tough for me to give it, Dinesh, because there's too many products and too many old and new, and it's quite dynamic. So I'd rather refrain from sharing it. Also, when you have erosion, some of the bigger ones, it really offsets everything else. So I'd rather not comment on it.
Understood. Thank you, sir.
Yeah, thanks.
Thank you. We will take the next question from the line of Mayank Hayaki from Axis Mutual Fund. Please go ahead.
Hi, on price erosion itself, have you seen any impact from the Condis WBAD merger in this quarter, or do you expect any impact going forward?
I think price erosion, if you see the industry perspective and what everyone is saying in the industry, it is there. And as you it's a double-sided thing. One is there's consolidation from the buyer side, and you have more and more record and approvals coming in. So due to that, with more people coming, more entrants coming, yes, there is price erosion.
No, but from this particular deal, are you guys impacted by it at all, or do you guys supply anything to them, or is there no impact from Condis WBAD?
We supply to everyone, and again, it's tough to comment on price erosion, customer specific, because whatever the price is, it gets across to all distributors.
Okay. And going forward, we should assume this $36 million quarterly run rate to be the base?
As someone said earlier, I think what we did this quarter sequence about 230 crores or so, I could say, that would be the base. As I said, there will be erosion, but there will also be new product launches. So it's a good indication of the base for next year.
Great. Finally, on the R&D budget side, has there been any revision, because we have been spending a little low per quarter? I understand there is volatility and there is volatility in the quarterly spends of R&D, but on the annual budgets, has there been any revision on the downside that we are seeing this low run rate, or we will see some pickup in the last quarter, because of which, initially I think we were talking about 450 crore kind of R&D budget for the whole year.
Initially we did talk about closer to 450, but I think we'll end up lower than that this year. I think some projects didn't require as much IPI, we didn't have as much of a spend. Going forward next year, I think the number will be closer to 500, as I mentioned earlier.
So what has changed is basically that some of the projects have got lower, are taking lower money than they initially assumed. So it's, the number of projects have not changed per se.
No, the number of projects haven't changed, and it's a dynamic situation. So we keep fine-tuning our R&D, deciding which product to push when. Sometimes we may shelve a product also. Sometimes we may not be successful. So it's a variety of factors.
Great, thanks. That's very helpful. Thank you and all the best.
Thank you. We will take the next question from the line of Alok Dalal from CLSA. Please go ahead.
Yes, hi. Thank you for taking my question. Pranav, any signs or any indication for the US generic market for this year, in the sense, do you expect pricing pressure to remain similar to 2017 levels? Any indication of players leaving market, particularly in very competitive products? Anything that you are seeing there?
No, Alok, actually product-wise you may see some supply disruptions which may be short-term, and that's why we try capturing those. As regards the pricing pressure, I believe that's going to remain because as we have more approvals coming in and more buyer consolidations, that will continue till about a certain point. As regards people exiting the market, I don't see anyone exiting unless they have an FTA issue or some strategic decision that they want to get out from. But let's see, I think as you all know, the pharma industry is quite dynamic. Let's see how it goes.
But Pranav, we have seen that although the approvals have gone up in 2017, but the new launches have lagged those significantly. Say there are companies who have received tons of approvals last year, but because products were or the market size was so unviable that they have not launched those. So do you feel that price pressure, the factor is more from buyer side as compared to competition coming in and eroding prices, because those launches have not happened? I mean, we've seen that.
Well, it depends. If it's a really old product with 7, 8, 9 people there, then one would think twice about taking the effort, and already if you have a plant with multiple approvals coming, is really worth it launching the product. So it's again quite dynamic. It's very tough to give a one-size-fits-all approach, but I think combination of factors keep happening regarding people either not launching products or the buyer side consolidation, or sometimes you may have 9 products and an entrant may come in and still want to pick up market share and drop prices. So I think we're seeing everything.
Okay. Thank you very much for taking my questions.
Thank you. We will take the next question from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Thanks. Mr. Bharti, our gross margins in this year are pretty high. I presume that obviously limits some bit of scope for expansion from these levels. We're talking about a material jump in R&D for next year from about a 400 odd number that we're doing this year. Pranav mentioned that we'll be probably closer to 500 for next year. So how should we look at our fixed overheads in this context? This year we had a good year, kept pretty strong cost control. Given the fact that we've got a number of new facilities coming through, getting commissioned during the year, how should we see that bit and the overall EBITDA margins playing out going forward?
So, no, good question. Good observation, because next year once these facilities get commissioned, some of these pre-op expense would start getting charged as an expense. So there'll be an additional cost next year. There's an expected additional R&D cost, and I think some of it would be taken care of by increased business. But I don't rule out a margin pressure next year.
Okay, sir. So, sir, in your assessment, it's basically do we still scope for margin expansion on the gross margin from these levels, or sorry, sir?
It's very difficult. We have reached to an optimum level.
So it's largely going to be a revenue-driven growth in the business.
Unless I get a product where cost and sale price is the same. The profit and the sale is the same.
Right. So it's largely going to be a revenue-driven growth for us incrementally going forward from a margin perspective.
Yes.
Okay, sir. Thank you.
Thank you. We will take the next question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. A couple of clarifications. One was on the US. You mentioned that because Q&Q improvement because of increase in some volumes. Would it be also due to some products coming through our own marketing front end, and that would have doubled the sales? Would that be fair to say in the last couple of quarters?
I think some of the growth has come through those products. As it comes to our own front end, I think we have more control on the marketing, on the sales, on the supply chain, so we can take positions on those products. You're giving less profit share out, so you have more flexibility in terms of pricing. So yes, that has played some part as well.
Okay. And the acquired benzonatate product is still yet to kick in, right? I mean, from January to March quarter is what I understand, right?
Yeah, I think these products haven't come on the Alembic label as yet.
Okay, but fair to say that given the strong cold season, it should be a good product going forward?
You know what, to be honest, I don't know. Until the product comes to us, I haven't done any analysis of it. It's still we see it as a partner product of Orit, so till it comes to us, let's see how it goes.
Understood. And just missed that comment, the earlier question, this, so next year is pretty known that cost of these large facilities that we are, commissioning and commercializing would come on stream. What about Q3? Have you seen this oncology block which is now commissioned? The expenses of that coming in, and that is reflecting in other expenses, or is it largely due to the increase in promotion expenses?
So Q3, if you compare with Q2, is largely because of additional promo expense which we did in December. It doesn't have much of impact of onco facility.
So that should come in fiscal 19, sir?
I think so. No, not I think so. It would come in fiscal 19.
Okay. And some color on the inspections. So I see, you've given some data of the last inspections. So Karkadi and this Panelav could be due for inspections in the next 3-6 months?
That's right.
Okay. Okay, understand.
That's why we give, we don't know, so that's why we give that information of when was the last inspection, and people have their own. But I don't think there is a set pattern. FDA may not come for 3 years, may come after 1.5 years also. So I've seen all types of.
Right. And lastly, color on the tax rate this quarter particularly lower than your usual run rate. So do we still maintain that 21-22% for the full year and next year, or?
I think the only difference on a quarterly basis can be because of the profits captured at India level and the subsidiary levels. As far as India level is concerned, 21 is almost now a fixed rate for us because we are under MAT. As far as the profit bifurcation between India and the subsidiary can create some difference on an overall consolidated basis.
Okay, so but you will be around that 21-22% mark, or could be a tad higher?
It would be, unless Jetli reduces it next year.
Okay, thanks and all the best.
Thank you.
Thank you very much. That was the last question in queue. I now hand the conference over to Mr. R.K. Baheti for closing comments.
Yeah, so good, interesting interaction. Thank you very much for joining the call, and look forward to be with all of you again next quarter, which will be the year-end call also. Thank you very much, and wish you all the best for the budget tomorrow.
Thank you. Ladies